Welcome back to the channel. Don't go anywhere. In this video, I have got you covered for a 5-step process so you can start nailing pullback trades. So you can get that trend continuation, that good momentum, and start banking regularly. Now, there's lots of videos out there on the web, and they all claim to give you a nice strategy for pullbacks, but they're really just copies and imitations of each other, and they miss something really key over and over again. So I'm going to give you that secret sauce in this video with 5 simple steps. Let's get into it right now. So what is a pullback? A pullback is simply a correction leg in price, bringing the price down to potential better areas of value for continuation trades. So what we're looking for when we're looking at pullbacks are for continuation trades, which means we are looking to join the trend. So let's just break this down really simply to start with on what that looks like in terms of a line chart and in terms of price action. So if I just jump over here, I'm going to show you a very simple uptrend. Okay, you would have your first move up, you would have your correction leg or the pullback leg, maybe the next move up, and maybe that continues. Okay, that would be a normal uptrend. And then the same for a downtrend. We would have that first move down, you would have the correction or pullback leg, you might have the second move down, the correction pullback leg, and so forth. Okay, and as traders, what we're looking to do is participate in following that trend in the pullback areas, right? So these are the ideal areas that we would be looking to buy, and this would be the ideal area we would be looking to short or sell. Okay, but timing these can be difficult. Understanding where this pullback will come into is key, and also understanding the trend is key. And something a lot of traders, and it seems a lot of videos and educators on YouTube seem to ignore, is market structure. So let's get into that right now, because that's going to help you identify if this is truly a pullback leg or in fact the start of a reversal. So my first step to trading pullbacks, or really any trade at all, is to identify what the higher time frame is doing. So what do I mean by that? I mean, what is the weekly chart doing? What is the daily chart doing? What is the hourly chart doing? Especially if you are an intraday trader, you should be paying attention to these. These are important levels. Understanding where the momentum is and where we're driving towards is key. So let's just think about this. Let's just say this is your higher time frame. Could be a daily chart, could be an hourly chart. It really depends what you execute on. But let's say this is your higher time frame. All right, and we are clearly making a higher high here before putting in a higher low. We confirm the uptrend by the break of structure. All right, that's your continuation where we make a new higher high and a higher low, and we continue. All right, so that means our higher time frame is very clearly bullish. All right, we are bullish on the higher time frame. Now if we flip this the other way around and we are making lower lows and lower highs and a new lower low, we have that breaker structure down before putting in another lower high, we are clearly in a downtrend. Okay, so what does that mean? What can we do with that information? That should really make a difference to how you are looking to execute on a lower time frame. All right, so step 2 is understanding the lower time frame legs within this higher time frame leg. So step 2, what is the lower time frame structure and how does it fit into the higher time frame structure? Now this gets a little bit trickier, but this is the key to getting you the right side of the trend. Okay, you want multi-time frame structure to align. Now what do I mean by that? I'm going to draw it out for you right now, and hopefully it's a bit of a light bulb moment and really helps you get the right side of the trade for these pullback continuation trades. Okay, so let's draw it out right now. Now I want you to remember that the white line in front of you, this line chart in front of you, is the higher time frame, and what I'm going to draw onto the chart will be a lower time frame. So we could say the white line is an M15 or an H1, and I'm going to draw an M3 or an M5 or an M1, however you want to do it. Now if you're a swing trader, that line chart in front of you could be a weekly or a monthly or a daily, and maybe the blue line that I'm going to draw now might be your hourly chart. Okay, so it's a chart, it's smaller than the higher time frame chart. That's the key here, okay? You're looking for alignment between the smaller chart and the higher chart. Okay, so as continuation traders, where are we looking to participate? We're looking to participate once the higher time frame has completed its correction leg, once it's put in the pullback, and then we're looking to join the trend on the lower time frame, expecting the higher time frame to continue its trend up, completing this break of structure, making a higher high, and then we're going to look to exit before it puts in a new higher low and do the same thing over and over again. These are simple, repeatable steps that you can do just to accumulate positions and bank easy money. So how do we time this? This is the key thing. How do we time this? If we think about, I just want to think about this pullback leg here on the higher time frame. What would that look like on a lower time frame? Because on here we're thinking about one leg up, one pullback, one leg up, one pullback, one leg up, one pullback. On a lower time frame, that leg that I circled would look like this, wouldn't it? It would be a series of lower lows, lower highs, lower lows, lower highs, and lower lows. So how do we time it? We're waiting for structure to shift. Okay, so am I taking this here? No, I'm still not interested. I'm not even interested here, but I am now interested once we have taken out this strong higher low and pulled back. Okay, now I'm interested in that long continuation. So let's just think about this lower time frame structure here. This is a downtrend. Lower, low, lower high, lower low, lower high, lower low. This is an intermediate high. It has not taken out this pivot here, okay? We now have a higher low and we have an internal higher high. Now, I don't take these personally. Lots of people do. This is an early trade for me. Why? Because at this point, this can still trap and move lower if it wants. I am interested really in this change of character once we sweep out of this level and come back in. Okay, why? Because this was the lower high that made the lower low. That's the area that I'm interested in. That's what I consider a shift, a change in character, a market structure shift, whatever you want to call it. That's the point I'm interested in. So what do we have after that? Okay, after that we have a new higher high and a new higher low, and it's this higher low which I am interested in participating in, and every higher low that comes afterwards. All right, if we just continue like this. Okay, so remember, this blue price action is the lower time frame. That's exactly what is happening inside this higher time frame leg right there, right where I've circled. Okay, so this lower low, all right, and the lowest low is the end of this pullback. And once we get that shift above, this is where I'm now looking to get long, and I can risk this low. All right, I've got a set risk. And where am I targeting? Well, my first target, quite simply, would be the previous high. Okay, why would it be that? I am expecting a continuation. I'm expecting a break of structure there and a continued long. Once we start to get that break of structure, I am then anticipating the next potential pullback. That's how trends work. They don't go straight up, they move in waves. We go a move up and a pullback, a move up and a pullback. So once we get that breakout and a new higher high on the higher time frame, which would be here, I'm expecting that higher low to be put in, and I can look for this same type of pattern all over again. So when we're thinking about these pullback legs to get that continuation trade, what's the biggest mistake traders make? It's not understanding the higher time frame structure. Okay, really simply, if you are a buyer in the market, all right, and you keep buying this leg in here and the higher time frame is pulling back, essentially what you're doing is buying a series of lower highs and lower lows on a lower time frame, and you, unfortunately, my friend, are going to get knocked out of the market continuously. All right, you need to be waiting for these change of characters on the lower time frame to signal that the higher time frame has completed its pullback leg. There are lots of other ways we can look for confluence in this, which I'm going to go through right now in this video. Okay, so step 3 of taking this pullback trade is simply to wait. All right, identify your key levels and wait. You must not anticipate This trade or any trade when trading, you need to let the market come to you and you need to execute on the trigger. So we've gone over structure, okay? I've told you. So we've gone over structure. I've told you about waiting for that multi-time frame structure to be in alignment, for the lower time frame to signal that change of character and to get that continuation where your lower time frame and your higher time frame agree. What else can we look at other than structure? We can look at S&R, which is support and resistance, and we can look at supply and demand. So let's just mark those out here as well so you can understand, because there's some really easy models here with flip zones and break and retests and very easy ways of participating. So let's just think about this same exact trade again. I've added on one more leg at the top, all right? So let's just draw this out as we see it. So once we make this high and we pull back, we know that there are some sellers up here, okay? And we broke through it, clearing out any potential sellers, okay? So sellers that were in here participating at this high got blown out of the market and they ran their stops, and you got breakout buyers coming to market and force the price higher. Once we did that, it is likely, once we get that break of structure, that we're going to get the pullback. So here is your pullback leg. All right, and where do we come into? This old resistance or old area of supply, if you prefer, which now becomes support. Okay, so this is basically a flip zone. Now, on a 5-minute chart or a 15-minute chart or an hourly chart, you can do this by the candle changes. So this might be your last up close candle, and you flip that once we get through it and it comes back and retests it. You could do a straight line, you can do a zone, however you feel comfortable trading. All right, but this is how I would do it. This is my flip zone because this was supply, we broke through. Once we come back, I know that any sellers in here who did not get stopped, who are just being really, quite frankly, idiotic at this point, are going to cover break even, and buyers are going to get good value in the market. All right, so that would be your S&R. All right, that would be your flip of S&R. Resistance becomes support. Really simple. Then we get this break of structure. All right, big break of structure and a huge move this time. I did a bigger leg this time on purpose, and it's coming back, but it's not coming back to this potential area of demand, right? Because we could potentially do this same kind of thing right here. Let's just move this in. All right, we could do the same thing here. All right, so we don't get that deep pullback this time. So what can we think about? We can think about the size of the leg. We can use a fib, all right? So I would always be looking for a 50% or more retracement. So here you go, into 50%. Now I prefer this golden pocket down here if it can do it, all right? This is my favorite trade when it comes into this golden zone, anywhere from a 618 to a 786. That's where I like to get involved because I get a good value pullback, all right? But what do I like about this? We do this 50% retrace, we do an internal move up, and we do this little pivot here, and in here you have a W. That is a prime area where shorts will get stuck, and it's something that I like to attack when getting long. Now the opposite way around would be an M shape, all right? It'd be exactly the same. This, of course, doesn't have to do this. This could just be one single move and a move up, all right? So that's also fine. When I'm looking at these, I need to look at this leg up to see if there's an area there I'm interested in. So other than the 50%, I need to look at this area right here. Is there something like an imbalance in here where we've had a huge engulfing candle which didn't let enough buyers participate in the market? So we're going to come back, we're going to rebalance and reprice that before continuing up. All right, so I am not just taking this trade on a guess. All right, there needs to be something in the structure, and I need to have some form of confluence to help me in the trade. Okay, so we've gone over most of the key principles. There's just one left to look at, which is a fib retracement of the old pullback. What do I mean by that? This leg in here that we looked at, this pullback leg in here, once we've had a break of structure and we've clearly gone through it and started expanding, we can think about this whole leg as a potential area of demand. Like, we know that we can look for that break and retest, which would be this move here, okay? But sometimes it might want to do a deeper move in, especially when it's expansive, okay? So that deeper move in, we can think about how big this pullback leg is, all right? So it might not just retest the top of this leg, it might want to come deeper, And again, I can do a fib and measure out this leg and look to see where an area of value is. So maybe 50%, maybe I have a key area of demand on a lower time frame down here which stands out. So maybe on an even lower time frame, maybe if this is a 15-minute chart and I'm looking for a 1 minute here, I can look at the last down close or the last two down close candles before we got a big engulfing move up, and I can measure those and mark them out inside. So there's lots of ways of starting to stack ideas. Again, multi-time frame analysis. All right, I'm looking at multiple time frames and looking for areas of confluence, and once I find those, I mark them out. So let's move on to other indicators and other things that we can draw on our charts to help us understand areas of confluence, help us get into the trade with confidence. Okay then, so on to step 4, which is simple. Confluence for confidence. Something I preach and I stick by. Once you've got your key areas marked out, you've got your demand or supply, you've got a potential flip block, or you've got S&R, or you've got an imbalance, or you've marked your fibs, any of these things that you're looking at, and you're waiting for price to come back in, and you're waiting for that market structure shift or change in character, what can you do to help you with confidence getting into the trade? Simple, isn't it? It's looking at key indicators to help build that confidence. So there's 3 key ones really that I look at. They're trend lines, they're EMAs, and they're types of VWAPs, VWAP or anchored VWAP. So let's look at the first one now, which would be trend. All right, really simple. With trend lines, we are just looking to find areas of dynamic support where pullbacks and correction legs like to come into, and price will hold and move up. All right, so we're looking for points of contact just like this. All right, that would be a perfect example of a trend. Now if this is a lower time frame that we're looking at, that's a really nice example of where price is holding. You have confluence here of a potential 50% pullback. There's lots of things going for you here. Now, if this is a higher time frame, all right, we are not just getting long off that higher time frame. Remember what we said in the first section of the video. We would be looking for price action to show us that change in character before moving up. All right, so what could we use in here? All right, we could use another trend on that lower time frame like this, okay, like that break of the trend, giving us confluence for that shift which happens here, in case you need reminding. All right, there is your change of character, okay, and here is your drive back in to the golden zone. All right, you see how I'm stacking things together here. So I've got a higher time frame hold of trend, I've got a lower time frame break of trend, I've got a change of character, and I've got a pullback into my golden pocket. So how many things have I got going there? Higher time frame trend holds, lower time frame change of character, lower time frame break of trend, and a pullback into golden pocket. 4 things. That's 4 things going for me where I'm now interested in taking the trade long. All right, so that is an example of stacking lots of things together very simply to give you confidence in the market. What's the next thing we could look for other than trend lines? It would be EMAs. Let's get onto that right now. Now, if you followed this channel for a while, you will know that I use a selection of EMAs in a custom indicator known as FlowZone Pro. If you want to download it, the link's underneath right now. But if you just want to stick normal EMAs on your chart and follow what I look at, I use 3 together in clouds. So I use a 13 and 21, I use a 35 and 50, and I use a 72 and 89. And if people want to know why I use those numbers, those are Fibonacci sequence numbers, all right? So I'm using rolling fibs within my EMA sessions. There's reasons for everything that I use intraday. So with that said, what am I looking for on these pullbacks, right? I am looking for structure, of course, to hold. I'm looking for areas of confluence, and I'm looking for my flow zones, or your EMAs in this case, to be holding price, all right? Something like this. All right, not too dissimilar from trends. But where I will say people often go wrong, and what lots of videos on YouTube are saying, they're all saying the same thing. Wait for price to come back to that 50 SMA or EMA and buy it there. That is simply incorrect. There is absolutely no reason for you to do that whatsoever, okay? Structure absolutely comes first and foremost, all right, because you don't know if price is going to come back to that EMA and go straight through it, okay? Also, every different stock and indice has its own personality, so you will find some stocks like to do deeper pullbacks. They might like to come and test the 72.89. They might even like to come and test the 200, while other stocks do very shallow pullbacks, especially in trending markets. They might just want to come back to the 21 every now and again. So it really depends on what you are trading, and it depends on the size of the move that day and how much momentum is involved. Okay, so there's lots of factors here, but essentially what we're looking for is for price to hold the EMAs or an SMA, if that's what you trade, very much like a trend line. Okay, so the way I have it, if my flow zone suite is all green and blue, then I am looking for bullish holds and continuations. And if it's flipped red, then I'm looking for shorts. It's something that I use as confluence to stop me trying to be a reversal trader, okay? Unless structure tells me. So structure always comes first. Now, I'm going to give you real examples of all of this on a live chart at the end of this video. Don't worry. The last thing we're going to go on to are VWAPs and anchored VWAPs. Okay, so let's say this green line is a VWAP or an anchored VWAP. Volume, weighted average price. It's fair price for that session. So right now, it means I know that buyers want to participate in and around this price. Again, we are using this for confluence, okay? We are not using this all by itself. So right here on this move here, we had a nice pullback in. It set the higher low, it held the VWAP, and we got that continuation. You'll notice how this second leg didn't come to the VWAP or anchored VWAP, okay, and it continued higher. Now, I want to use this as an example of where people go wrong, all right? Just the same as when we talked about the SMA or the EMA. Let's say price now does this. Are you looking to buy this because it's there? Absolutely not. Structure is telling you we have broken down now. We are likely to have a continuation lower. So in case you cannot see it, all right, this was the higher low that took you to the higher high, and this is your change in character. Okay, so this now is bearish. So we would be looking for sells once that happens. That's why you do not just buy something or sell something because it gets to there. So we have a change of character. We have a 50% move back in. We have this level here. I'm just pointing it all out so you can start to see everything we've done in this video. This becomes resistance, okay? And we're looking for shorts and sells for continuation lower. So I don't care if that green line right now is VWAP or an SMA or an EMA. It can be whatever you want. But the structure here, the market structure, is telling you it's a sell. So even if you don't want to take the sell, you definitely don't take the buy, okay? That's how I want you to understand this video. That's where the other videos you've watched on YouTube have got you in trouble. So into the last step before we go into showing you this in real time. So step 5, do you have a trigger and is the risk reward right? Okay, because if everything aligns perfectly but your risk reward is still not worth it, should you be taking the trade? Is it worth the mental capital and stress to get into the trade if your risk reward ratio isn't right? So first of all, let's start with the trigger. All right, so I like to look for triangle and U-shape. That is the basis of trading for me. Okay, so in this chart right here, we have this downtrend. Okay, we come into the flow zones or your SMA and EMAs and the VWAP. Then we hold. All right, we create an area of demand here, and we push up and we get that change of character. Okay, so now I'm thinking bullish, right? I know the time frames are saying we are going to move up, so I wait. I'm waiting now for the retracement leg. I'm waiting for the pullback. We get that pullback, it comes into my flow zones or your EMAs, whatever you're using, creates a higher low, and it holds this old area of demand, right? So already lots of things stacking up for us. Trend is in our favor. We have an SMA or EMA hold. We have an area of demand. We are above VWAP. You could do a trend line and say we're on the trend line or above the trend line. There's 5 things already in our favor. So then in this area here on a micro time frame, on a 1 minute or a 5 minute or a 3 minute for me personally, because I trade intraday. So now I'm looking for my trigger, which for me means U's and triangles. Okay, so if we just take this price action from here and I'll draw it out. Okay, I'm just going to draw it out here so you can see what I'm talking about. Okay, so normally the trigger for me will be a U shape or triangle. So what do I mean by that? Let's say price action, we're in this leg, it's coming down. All right, I am looking for price to show a willingness to start curling like this, where I can start to get long this side of the V. Okay, I'm not looking to take this down leg, remember. The other thing I'm looking for, if I can't get this beautiful U shape, which is what I'm looking for, is a potential squeeze, which is a triangle like this for a move up. All right, so those are the two things. However, I will take dip buys. Okay, I do take dip buys. Now, the key to the dip buy is understanding everything stacking in your favor. So here, in this dip buy here, if you have everything in confluence, if there is an imbalance here which needs to be priced over the top of an area of demand, with your EMA in place, with multi-time frames saying bullish, and your risk reward is correct, you can look at it. Trading at the end of the day is all about having your risk reward correct. So an example of this right here, let's get the long signal out. Okay, here's long. All right, so if I was looking for a long on this dip back in, and I'm willing to risk this previous low right here, and I'm attacking for my first partial, let's say here, that is still almost 4R. Okay, now on top of that, once I get there, I can start thinking about holding a runner. So what did we talk about? We can think about fibs. So if I go from this high to this low and I start thinking about a measured move, I can look for a runner all the way up here, or maybe I just do a fib to the 161. So now this runner becomes worth a lot of money, all right? To the 161, I'm looking at 6 over 6R, and the measured move of the whole leg, I'm looking at almost 8R. Okay, so you can start to see how I trade, and you'll see that I trade this all the time. If you watch my reviews, I try and get 2 on. I will lock one in on the breaker structure, and then I will try and hold that runner for the bigger move and move my stop break even. And those runners, they will start to add up. As long as you obey structure, you will be good with these types of trades. So the last thing I want to go over are some pro tips. All right, there are some key parts that make probability stack in your favor when taking a pullback. So the first one is, how extended are you? All right, if you are really extended in this move, if we are in a huge runaway move away from all the support and price action, you do not really want to be getting in on shallow pullbacks. While they may work, you are having a huge amount of risk because there is no real structure below you. All right, so you need in those circumstances to be waiting for that deeper pullback. Wait for the structure to come in place in your favor. Do not chase the trade on the breakout, and do not take the really shallow pullback. All right, wait for it to come back into some areas of value. All right, that's my first pro tip for you. My second pro tip for you is, what leg are you in of the trend? Okay, we always as traders are looking at how many legs we trade. What do I mean by that? If we're in an uptrend, we do the up push pullback, up push pullback, up push pullback. After that third leg, is it probable to go higher? It's unlikely. It might go higher, but it might need a longer area of consolidation. All right, so the best pullbacks you can get are the first and second pullbacks. Those are the most probable because those are the pullbacks at best value. That's where institutions are starting to get into the market and they're loading the boat. It means you're in early in the trend, and it means you can let a runner work, right? So at that point, if it does 3 legs, 4 legs, 5 legs, 6 legs more, it doesn't matter. You were in early, you can just move your stop up and let it work. Don't be looking to join trends when we're in leg 3, 4, 5, 6. You are asking for trouble. If you're going to do that because it's a very strong trend, at least consider sizing down, all right? Think about where you are. Is that good value at that point? I'd argue it's probably not. Okay, so now let's do a live replay and let's put everything in together. Everything that we've learned today, let's start constructing it. So the first thing we're going to look at, as we said, what is the higher time frame trend? All right, so this is an hourly chart. Let's just zoom out here. And you can clearly see the hourly chart is in an uptrend. All right, we're in uptrend. Here was the low that we put in before starting to turn and expand higher. So instantly, I know the higher time frame is in an uptrend. All right, I know the weekly, the daily, the monthly, the hourly, the 4 hourly. Everything is in an uptrend. Now, when will that change? Well, here is our highest high. What was the low that got us there? I would argue it was this low in here. All right, that's the clear point for me. And really, we're trading in a range right now. Okay, building liquidity, accumulating positions to move higher. Okay, so I am thinking long, and I will stop thinking long when we break beneath that. Okay, and then I'm looking for a short and return in. Is there anything we can look at in terms of higher prices if we break through here? So we're going to have to look left. All right, we're going to look at prior price action. Yes, there is absolutely stuff here. Okay, so here is an imbalance. And then above that imbalance, we have what? We have an area of supply right here. So let's just do this red and extend it right. And if we look into this closely, we can see that there is quite clearly some equal highs there. So I'm expecting those to get run. Might not be today, but at some point. And we have the same thing over here. So I could potentially just do the same on an hourly here. Okay, so those are areas I'm looking at, areas of interest. So the next thing to think about is, where did demand step in? Well, we definitely had it in here, right? So we can do this as blue. I'm going to take extend right off for this one. Okay, so we had this area here, and we can think about trend, right? We had this downtrend, squeeze pattern. This area here was exactly the same area in terms of bodies that held up before, and we had an imbalance here, right? So there was lots of reasons it came up. It repriced this imbalance. It held this old demand zone down here, this block down here, before it expanded higher. These candles dipped into that whole demand zone. It rebalanced price. We created the squeeze. It created new demand, and it expanded higher. Okay, so lots of reasons to think bullish. All right, there's nothing in here telling me that I need to be thinking short. All I can see is areas where I want to potentially buy and areas that I think we might flip. Now, you could argue that there is an area of supply here and the wicks above, of course, which are marked out with the lines. So I'm not going to mark those. So if we turn that, that's also an area of interest to me. Let's go down to a 5-minute chart now. And I'm just going to take us forward to the New York Open, 9:30. So it's just zoom forward. So rejecting supply. Surprise, surprise, we've come into demand now. Let's see if we get to the open. Okay, so just pausing here and flipping to a 3-minute. We're coming right into the open here. So we've got our levels marked out. We know what our draw is on liquidity. We know what we're looking for. We're looking to take out these highs, and we're looking to drive up into supply on an hourly chart. Okay, that's what makes sense to us. On this lower time frame, what do we have? We have change character above here, and definitely will do above here. So what am I thinking? I would like to see price come above, flip this, and start to create a trend higher, which I can join on a pullback, right? Really simple. That's what we're looking for. So from this point on, let's turn the flow zones on. Let's put our VWAP on so we know where we are. So we're above VWAP. We've based on demand. We rejected the first part of supply, but we have been up here numerous times now. Okay, 1, 2, 3 times. We know it's an important level. The more times we're up there, the more likely it is to break. So we are thinking long. All right, we're thinking long. Let's just see how it plays out. So there's our flush into the open, instant pushback up. Okay, so we've got this break of this potential 3-minute trend here. All right, so if we can get above and hold, it's looking pretty good, isn't it? So there's our push above. There's our breakout above. Okay, so starting to confirm. So I'm going to flip this now to blue and refine it a little bit. So I am now thinking about a return back in. We're thinking about that pullback back in. That was pretty shallow, not enough for me. I'm going to have to wait and see if we do something else. That's a better expansion now. Now I know it's a trend. So now I'm looking for the pullback, all right? So there's two ways to measure this. We can go from lower day to here. If we got a great pullback, it would come back into around 33. That would be absolutely perfect. Into that old area of demand right down to here, 31.75 would be my risk. So that would be ideal if we can get that move. Let's see. There's a shove down. All right, I like it. Buying 3 contracts there. Oh, filled me a bit late on there, unfortunately. So now what we're looking at, we are going to look for that potential trend kind of move. All right, a trend line break and flag for the expansion higher, okay? Just let it build. There's the IB high. So we're starting to get the IB high in now because it's gone 1030. So we know if we trade above the IB high and we can sustain it, we're likely to trend. So it makes pullbacks even more likely. There's a pro tip for you. So there's the curl and expansion, exactly what we talked about. Look at this triangle, okay, and look for this U shape, all right? Everything that I've taught you into these flow zones, my EMAs, into a retracement level of 50%. Everything there so far has lined up. So higher prices, what do? We wait for pullbacks, okay? We're into the next leg now, all right? We are into the next leg. So we are looking now for a pullback. So we can do a fib yet again from here to here. We can think about this area here, 41, starting to become key because that's where we broke out from. This sort of area like this, I think would be key. We'll take that extend right off. And the 50% would be right back into there. So it's looking pretty good. Let's just pull that out. And the flow zones are there as well, right? So confluence, everything we talked about. There's a break of structure up. I still consider this down here the key point if we were going to trend lower. Really like the look of this. All right, starting to induce shorts to come in. There is definite liquidity sat just below here. So a move back into there and pop back up, I think we catch shorts out where they try and get breakout. So into there, let's just redo that fib because I haven't marked it to that new high. Okay, so 50 would be right down to 41, and if we did a lower fib, we're basically at 100% right now, yeah. So let it roll through. Now we've got this what shape? Triangle shape again. So if we start to expand through this here, I really like the look of this here, so I don't have to risk much. We've swept this liquidity under this red line here, okay? We have this triangle, so I have a good core position. We've pulled all the way back. This would be your support here, but I'm willing to add here because I like the look of this triangle. I'm looking for that expansion higher now. So bang, get it straight away, a bit lucky there. And if we get a break of structure, look at that, almost tagged supply instantly. So just playing that pullback of the range, not having to risk very much with the triangle, looking for now further expansion. So hopefully I can get one off into supply. There we go, take one off there. So now I'm going to think about where my last target is. So I have the top of supply. We can also do a fib from this high to this low, and that 3618. So 4567.25 would be a potential. We could also think about some other fibs as we start to build here. So the top of supply looks good for now. Can we get it? Just missed my fill there. Maybe we get it next tag. Go on. There we go. So selling into that. How many do I have left? I think that's it. No, one left. So I'll hold a runner. Now we have to be aware we're extremely extended. So zooming out, okay, we now have a trend channel and a steeper trend, and we've hit objectives. Okay, so am I willing to add on pullbacks now? Absolutely not. We've done the move. There's absolutely no reason to be trying to get involved up here. That is a tomorrow play. That is not a today play. So we are likely to start failing soon, just like that. And I'm out. All right. I don't need to hold. I don't need to look for that pullback. We are out. We've made our objective. That's it for the day. There you go. 6,200. Really simple. I know it was quick, but I want you to see how easy it is just tying everything in. We're using supply and demand. We're using S&R, and we're using Fibonacci's, and we're following trend. We're using confluence to get us involved. Hope you enjoyed the video. Have a great day. If this video is helping you master pullbacks, you can do me a favor right back. Please like and subscribe to the channel. Tag a friend in the comments that you think this video will help. And of course, if you want me to look over any other subjects, just drop me a note in the comments of something that you want me to review. Until next time, trade safe, use stops.